Hey, good morning, everyone. This is Frank Ochoa, aka Pivot Boss, with your Pivot Boss Pre-Market Report for May 13th, 2016. Happy Friday. Here's a look at the daily time frame of the ES right now. I mentioned before, there's not a whole lot of edge around VPOC. There's not a whole lot of edge right here at value at the top of the HVN here. It's just a lot of whipsaw, and that's why I mentioned before it's safest and best to wait for the edges of the range to look to play back across the range. When we're right here in VPOC, there's really not a whole lot to do. Obviously, we saw an opportunity here where there could have been a buy opportunity back up. That buy opportunity occurred off of 59 to 61. That fizzled late in the session here, and we saw a sell-off back down. Price popped back up to 61s, and you can just see how price is just trading around that area. Right here, it's a very chunky part of the profile. Very dense price action in here, and you can see that's where the market wants to trade right now. I think we are starting to coil up a bit. We're starting to see some patterns of a contracting range here that could suggest significant expansion ahead. So we'll be keeping an eye on this. As a matter of fact, if we drop down to the lower time frame, a little harder to see here. Let's bump it up to say a 20,000 bar chart, volume bar chart. A little hard to see, but for the most part, we do have prices that are kind of coming down like this. Prices kind of coming up like that, and you can see how the range has generally gotten a lot tighter here between 49, 45 up to about 79. So I would say right now 79 is very, very important. Above 79, above 80, that opens up a potential push through 2105, perhaps to new highs. That doesn't mean we continue onward. That just means we push toward those new highs and then perhaps rotate back down within the larger range. Up below perhaps 2049, 2050, that area right there implies weakness back down within the range. And right now, so far, prices below 48s have been rejected, and we're just kind of holding right now. So on a lower time frame basis, we're starting to see signs of congestion that could lead to significant expansion. I think right now, short term, the range is between 2080 and 2045s, 2048s, and outside of that range will open up significant expansion. Until then, we're likely going to see price quietly trade back and forth within this larger range. So be careful. We're trading around 61s, trading around composite VPOC. It can be very, very choppy, so you just have to be on guard and know that we're trading within a range right now. So anything you get in terms of profits, look to tighten up stops, look to take those quick profits and move on to the next opportunity. Here's a look at crude oil. Daily time frame of crude oil right now. One thing we've been talking about this entire time was watching the previous month's close. It has been offered, yet down here, price kept having to come back up to redefend off the level, so they weren't getting paid. Bears were not getting paid, and that's why I mentioned with all these bears coming in not getting paid, there's going to be a likely squeeze ahead toward 49.08. That's the HVN right here. Well, we saw a squeeze begin. We see price immediately rejected off the previous month's high and pulled back, and now you can see just a minor defense happening. And I mentioned before, pre-market yesterday, 45.66 to 46, that was a zone right there that bulls wanted to defend. And up until the very end, they were still defending 45.66. We're now sitting just above the previous month's close. A little bit of an inside day as we head into RTH. Again, as long as price remains above these 45.66s, there's a good shot at seeing further upside price discovery. So right now, pullbacks to be defended. Above 45.66 for a squeeze toward 48 and 49 ahead. Failure to hold above 45.66 rotates prices back toward 43.10 and a likely test of that HVN at 42.60. All right, let's take a look at the intraday time frame. On an intraday basis, price is kind of chopping around 5-day VPOC and 1-day VPOC, 46.18, 46.19s. Right now, again, that doesn't offer a whole lot of edge. You can see the shape of the current overnight pre-market profile here, very dense in the middle, rejections up top and up bottom. I think that's setting the range right now. Again, being that we're around 5-day VPOC, we could see more chop within this range. Very similar to the ES. We also have here the NQ coiling up over the last several days. So if we look at like a 10,000 volume bar chart, you can see this was kind of a tighter coil. We pushed to the upside, and now we're kind of holding within this smaller coil. And so this is all happening kind of off the top of the range. So 47 is very important. You can see 47 is right here. Price came into that CLVN, rotated lower, came into it again, and is seeing initial rejection. But 45.60s, very important on the downside. So you can kind of see what the game is right now. It's basically bulls want to defend and fade back up off of 45.60s. Bears want to defend off 47s and fade back down, and perhaps all the way across the range into 43.22. So that's kind of the range we're looking at right now as we head into the rest of the session. Here's a look at gold. Right now, we mentioned gold is a chop fest, back and forth, back and forth. It's basically the market trying to throw off those weak hands right now, because overall this thing continues to quietly push higher. I think the goal here is to reach 1338 to 1341 and perhaps even extend into 1400s. But right now what we're seeing is a lot of violent back and forth action. And almost any single day you look at, you can almost count on the opposite reaction. If the previous day was down, this day is likely to be up. If the day before that was up, it was likely to be down, right? I mean, it's just back and forth every single day. So right now we're kind of in a zone where we're holding still above 65, 67. Bulls need to get above 1284s in order to get this thing started a little higher. But right now it's more of a downtrending market. And so after this up day, perhaps heading into the weekend, perhaps Monday, it could be a down day, back down. I mean, it just has been a downtrending market. And right now, the structure of the overall range is starting to break down just a little bit. Although we're holding above 65s right here, which is the top of the range, it just hasn't been as pretty as we've normally seen here. And so this little rejection could bring us all the way back down to composite VPOC, and then we could see another rotation higher from there. So right now, just a very, very choppy range in gold. No clear, discernible, easy trade right now, but we'll continue to watch it as it develops. 65 still a very, very important. Here's the NQ. The NQ in a daily time frame rejected off these highs, back down, found a low, and bounced into 44s. Basically, the pivot point for the month here, 44.04, and is now pulling back. You see right here where the rejection came, that's off the previous month's low, right near 4,300. Price rallied off that area over 100 points, came back, and is now testing just above the previous month's low. So this is starting to look very similar to, if they can hold this, it can look like an approach back toward recent highs. Remember, our goal this entire time was if price can hold above 4,300 here, we could form a larger distribution above 4,300. And right now, we've seen a probe below it, a failure to hold, a rejection, and then a comeback and still holding above it. So this could be how we walk back toward 4,500. Perhaps testing the top of the range and then filling in the rest of the range as we head out. So that's something to watch out for here. Obviously, we have some lows here that we recently endured, that weakness. And if prices can hold above 4,300, we could be headed right back up toward 44.12s and perhaps as high as those 45.23s. Failure to hold 4,300 rotates price into the next HV below, which is likely that 41.80. All right, lower time frame chart of the NQ, you can see right here a downtrending market for the most part ever since prices failed to hold above this FOMC level. That's the FOMC from April 27th. Price pushed above it, failed higher high, held, dropped, rejected at it, and so far it's just been weakness off of that level, right? So there's a little bit of a downtrending market here. What I see recently is a failure to hold below this low here, and that's overnight trading, and now we're bouncing a little bit. So I think on the recent bounce here, while we may see another round of weakness, this recent rejection could at least get price back to 5-day VPOC, and that's going to be 43.44s. So we could be looking at a little bit more strength ahead, but that strength could turn into weakness once this 5-day VPOC comes into play. as the market has been in a downtrending mode. So if we bring up the previous session's high-low close, 43.06 is the previous low. You see how it was rejected. Now price is back to the weekly pivot point and the previous close. I think if prices can generally hold above, value above 43.15s, 43.17s, I think we can have a good spot to rally back toward 43.44. Otherwise, failure to hold this overnight VPOC here could open up a retest at 4,300 with a shot at seeing expansion. So right now, the early rejection off the lows implies a move back to 5-day VPOC, 43.44, but we got to see how it plays out here in this middle mess. All right, that's it for now. Let's see how this plays out heading into the rest of the session. Good luck, trade well, and happy Friday.